Hello, everyone, and welcome back to another episode of the Property Investment Australia podcast. I am one of your co-hosts, Lachlan Vidler, and I'm joined, as always, by my other co-host, Will Sanchez. Will, how are you feeling? You tired?
Yeah,
you full of energy?
I'm feeling good.
It's time that we give everybody what they really want to know, which is how can they win the 2025 property market? So I don't know about you. I think before we get into it, personally, I am so excited for 2025. And I do put out a lot of podcasts every year and often at the end of the year. And I can probably get sound bites of me saying that every year about the next year. But genuinely, I'm so excited because I think that next year is going to be so interesting from a property market point of view. I think that next year or the next couple of years really is going to be some of the biggest wealth creating opportunities. And I don't just say that as a professional. I don't just say that as come and give me your business and we'll buy your property and it's going to be great. I genuinely mean that. I think that some of the systematic effects that are going to be coming out is going to be insane, absolutely insane. So anyway, that's my probably not 25 words or less, but 2 minutes or less. What's your thoughts? How are you feeling about 2025?
Well, I'm a positive person by nature, right? So I think it's going to be great by the looks of it. I think what we've seen, it's a lot of variables happening next year.
Yeah.
So I think it's going to be a really good year.
Yeah.
Really good year.
If you're a pessimist, what would you say? Since you're an optimist.
It's going to be terrible. It's going to be terrible. It's going to be
Don't buy the property because we want to buy the properties because we've got lots of people that need to buy properties and it's going to be an awful year. Don't invest ever again, right? It's
there's lots to happen. Lots to happen. We all know that.
Yeah.
Should we get in? Should we get started?
Rip it out. All right, let's do it. All right. So I thought a really good place to start would be let's talk about some of the broader trends or activities or events that we're going to be expecting to see in 2025 and also maybe some of their impacts. So for me, I've got to clear my throat. For me, biggest cab off the rank. And we've been saying it for 12 months.
Drum rolls.
I don't think we know exactly when it's going to happen. We are seeing it change. I know there is a lot of political pressure that is starting to get piled on.
Absolutely.
An insane amount of political pressure that's getting piled on. But rate cuts. I think that is going to be the single biggest lever of the 2025 property market. And
that's the theme, isn't it? It's all over the news now.
What? Rate cut. Well,
because
just adjusting my seat here. It's such an exciting conversation. I've got to sit upright to make sure I'm in a good position to talk about it, mate. I think it is absolutely. It is news everywhere, and like.
But we thought it was going to happen this year.
We did,
right?
We did, and that's fair. And I mean, I don't think we. Oh, actually, you know what? There probably is some sound bites of me somewhere talking about the fact that rate cuts are going to happen in 24. But I think that the thing that came out was economic data that people didn't expect, right? And it's not that there was anything catastrophic, but I think, inflation stayed more sticky here than it did in other markets. It, we saw issues, perhaps not the right word, but we saw, a lot of commentary from the RBA around wage growth, around service pricing, goods pricing. Goods pricing came down very rapidly this year, as in the cost of goods. It was services that maintained quite a high price point. I'm sure we've seen that, whether it's doctors, buyer's agents, accountants, lawyers, your physio, whatever it might be, right? Like it's service price inflation was it was one of the stickiest points. And then also globally issues, so I think that knowing what we know right now about 25, I think that I'm quite confident in saying that I believe that there will be cuts. Is there going to be I think that at one point they were saying maybe upwards of 4?
But they were saying Feb. But then now it's they've already, or the majority of them said it's already towards the end of April, right? April, June.
So you can
there's political I think effect more than anything else now.
Well, I mean, the RBA is meant to stay neutral, right? And I think that they try really hard, and I think that, especially from the last governor and the issues in COVID, the RBA lost a lot of trust of the people. So I think, I personally try to not be a conspiracy theorist or anything like that. I do believe that the RBA is trying to operate politically neutral. I do believe that they are trying to, you know, operate in the best faith for what they believe is going on. But yeah, look, put it this way, I wouldn't want to be the RBA governor right now.
Yeah.
I wouldn't want to be.
It's a tricky position, isn't it?
Absolutely. But I think, if we do see those rate cuts, or not if, when we do see them, like, what's the impact? Well, for me, the impact is pretty damn obvious. Markets are gonna kick off, right?
Yeah.
And I think it's important for people to note, though, that I don't think markets are going to kick off just because rates are coming down. It's about the sentiment behind it. Because if you drop a 0.25%, right, 25 basis points, if you can't afford property right now,
But which happened in America, right? Not long ago.
I think America did 50.
50
I
was
think
it?
America did 50.
Yeah.
Yeah, I think America did 50, which I'm pretty sure. I think that then, like a month later, there was economic data that came out that then they were saying, because it's the Federal Reserve over there,
Mhm.
the chairman of the they were saying the chairman of the Federal Reserve possibly shouldn't have dropped it by 50. It was maybe not as bad as what they thought, but anyway, it, closer to home, obviously it's a bit different, but yeah, I guess getting back on the sentiment, if you can't borrow, 25 basis points isn't going to suddenly allow you to borrow, right? And you back that up, right? Like
Yeah,
if rates go down 25 basis points and banks pass on the full 25 basis points, if you can't really buy a property right now, it's not really going to let you buy property, right? There's obviously going to be some people, a very small part, that are just not able to, that will now be able to, but that's going to be the absolute limit of their servicing. But to me, the biggest issue, or not issue, I guess the biggest opportunity
Variable.
is the sentiment behind it, right? Like, as soon as people feel the confidence that something's happening, they're going to flood, because there are lots of people that can borrow right now.
Yeah.
Lots and lots of
Funny
people.
enough, if you think about it.
Yeah.
Right? Because the entry point is getting higher and higher.
Yeah, exactly right.
Yeah.
So all that's going to happen is those people are going to flood the market because they now feel confident. They go, okay, we've been through all the rate rises. We've now seen, the rate holds, and now we're starting to see the rate drops. Well, they're not going to drop to then increase again. So if the RBA and I guess the broader, government and economic, sort of conditions are dictating that where it's starting to bring in cuts, well, yeah, boy, I'd better jump in, right? But
people need to feel it as well, because they've been through the hard part, right?
Of course, yeah.
It's time we see some light.
And that's why sentiment's so important, right? That's why no matter what happens, I firmly believe that you'll never be able to accurately predict the property market in ones and zeros, because one of the biggest factors is sentiment. That is one of the biggest factors. That's why somebody gets emotional, somebody spends more than they mean to, and the property might not be worth that, but suddenly that's the new norm, right?
But then next thing you see, it's a seller's market, right? We don't want to see. We want to see that prices being competitive, right? Because as soon as the rate goes down, what's going to happen? People are going to flood. It's going to be a lot of competition. It's going to be tough.
Absolutely.
It's gonna be tough.
So that's rate cuts. What's the next thing? Federal election. So we are due a federal election. So I think what's going to be really interesting out of that is seeing, especially as we get closer, what are both parties doing about promises to, the constituents of Australia to try and get either stay in power or get out or get into power. We saw a few months back negative gearing, very much back in the headlines. Labor.
But what do you believe?
What?
What do you believe?
In what?
No, in general, if you think about it, because there's always news.
Oh, well, exactly right. Yeah. So, I mean, Labor, tried to when negative gearing came into the news a couple months back, they didn't really make too many comments, but then started to get more traction than I think that they wanted, and they basically lost the 2019 election. One of the key reasons they lost was because of their stance on negative gearing changes, and then it ended up forcing them. It ended up forcing, I think it was the PM to come out and formally say, we are not considering bringing negative gearing to this election. But you can see it was like wildfire. It just spread, one tiny little ember, and it spread. So
I remember when they said they're going to abolish stamp duty at one point.
Well, good luck. I mean, it's,
Yeah, it's the biggest revenue, isn't it?
It is, yeah. I mean, some states started, or some states have, and other states are exploring moving to the annual land tax. But yeah, I guess that's a whole different episode, right?
Yeah.
So I think federal election is going to be very, very interesting because, traditionally, and this is not meant to be a political discussion,
Please don't.
traditionally, right, like the Liberal Party has often been a lot more pro-investment. It's typically been a lot more pro-business. It's typically been a lot more pro-wealth creation, and the policies, tend to match that. And then the Labor government has tended to be, the I wouldn't even say the opposite. I think in Australia we're very lucky, right? Like we're not in the same.
One or the other.
Exactly. Yeah. We're kind of center left and center right, so it's definitely not as extreme as somewhere like America. With the election recently, but Labor has tended to be a little bit less pro the things that the Liberal Party have been. So I think from a property market point of view, it's going to be very, very interesting to see what policies are being brought and very actively marketed in those few weeks before the election when they're allowed to advertise, and it sort of ramps up because it's a big impact, right? We're here on a property podcast.
Absolutely.
So we've got that. I think the next big thing is the continuing shortage of supply. So for me personally, man, I don't see it getting any better, right? Like material costs have come down a lot compared to where they were in that COVID boom period, but cost of labor. Cost of labor, insane, right? Yep, we bring in what did you say? Migration.
Yeah.
We bring in migration, which I guess links to my next point, which is increased demand. So we can kind of talk about them together.
Yeah.
Continued shortage of supply and and then also an increased demand. Governments, and I mean more like your local councils, slow as ever, still approving developments and things like that.
I heard they're taking longer to approve.
Yeah.
Yeah.
Well,
to approve new
I'm trying to think who it was. I don't know if it was the New South Wales government. Somebody started publishing a list of councils, I'm pretty sure, and showing their processing times, almost like a name and shame type of setup for it, which is obviously a pretty good thing because they're so bad. But yeah, so we got that. I mean, shortage of supply. I feel like there's something else I wanted to say on that. I don't know, it's slipping my mind now, but I guess overall, just the shortage is going to continue, right? We're not like the government's already missed its benchmarks for its 1.2.
But if the rate is cut,
yeah,
what's going to happen with the shortage?
Oh, you know what? That's what I was going to say. Yeah, is with what you're talking about. Yeah, well, people are going to flood, so obviously that's going to drive property prices, and the shortage is going to enhance that increase in value. What I was going to say was developments also just aren't stacking up. That was what I was going to say, and your rates thing made me think of it. Developments just aren't stacking up, right? So even if things could get approved by council, by the time you go and look at material costs, labor costs, time costs, making a margin for the developers, not just talking about like, your 20-story apartment blocks, even just, little subdivisions and building 5 or 6 units or things like that, they just don't stack. So how can you increase?
Yeah.
How can you increase supply when you can't even get the developments done because the numbers just don't work? So anyway, I could go on for ages about this. It drives me up the wall. It's just insane. But yeah, and then like we said, increased demand. Migration's still more than flowing. Yep, it's, come back a little bit, but
the rent pressure as well. If you
exactly right. Yeah, rent pressures, and most migrants, and I'm sure you'd probably agree with this from your own personal background. They come, they rent, they work out where they want to live, they work out if they even want to stay. They don't buy straight away, even ignoring the legalities around what they can and can't buy and, Foreign Investment Review Board approvals and stuff. Migrants come and rent first.
Absolutely.
You rented, didn't you?
Yeah, absolutely.
Yeah.
Yeah. I remember the property I rented, at the time we were renting for like $550 for a while, and then as soon as we bought, I think the following year, you went to the same unit went to I think $850 or $900.
Insane.
Crazy the pressure.
Absolutely,
that was
insane.
When the turning point happened.
Yeah,
but with the rate,
crazy. Well, you're a living, breathing example of that,
yeah.
right?
Yeah.
That it's not just pressure on the growth or value side of property. It's also on the rents. That's cash flow.
Yeah, absolutely.
So I think in terms of like broader trends, it's shaping up for me personally that if you're in property or you're thinking about being in property, that there is a lot of upside to come in this next 12-month period, and you can really set yourself up. You can really set yourself up for some success over the next 5 to 10 years. I think by taking definitely 2025, but probably also, reality 2026 as well, seriously. But time's your biggest
But
friend.
if you get ready now,
Yeah.
I agree with you. It's gonna be crucial.
Well, let's talk about that, right? So let's talk through what are the biggest factors for individual success in 2025. And, I want to kick off with, for me, what I think is literally just like the biggest overarching thing. And we've got heaps to talk about under it, but it's preparation, preparation, and preparation, right? Like all those factors we were talking about, the people that wait for those factors to materialize into what they're actually going to be, yep, they'll make some money, of course, but they are going to be paying premiums. It's going to be harder. It's going to be, more difficult, more time consuming by doing it in that fashion. And as I said right at the start, I'm not just saying that as somebody who, works and obviously makes money in the property industry. I'm saying it because it's common sense, right? Like you said, I think you said in our last episode when we we're talking about a lot of people sitting on the sidelines not doing equity releases just yet
Because they're waiting for
the rates to come. Well, if everybody takes that attitude, then suddenly you go from having a pool of X buyers to a pool of X times about 10.
Yeah.
So preparation. So I think the first one, finance front, like. I'll throw it to you in a sec, but for me, the most obvious one is like get in touch with your broker. Go and get your finance squared away. Get your pre-approvals done. Probably more importantly, get your borrowing assessed to start.
Yeah, absolutely. I was going to say that.
Walk before you walk. What is it? Walk before you run. Get your borrowing assessed. Get chat. Like work out if you got issues. Like get them sorted out now with your finance, so then you can lodge your pre-approvals. So then you're ready to buy rather than starting that process.
No, but you wouldn't be. Yeah, you wouldn't. You'd be surprised with the amount of people who find out they've got issues.
Yeah.
When they start the process.
And that's it. Or you think you fast forward 3 months from, what are we? December, January, February, March. You think if you start tell me if you think I'm kind of on the money with these numbers.
Mm-hmm.
Most people are kind of slow to give documents and stuff like that. So when you meet with somebody, it's probably the better part of 4 to 5 weeks to go from initial meeting, get documents done. Get borrowing checked and sort of assessed, meet, work through the couple of issues that inevitably always come up, present options, write the application, submit it to the bank assesses, and then the pre-approval comes back. Surely it's a better part of at least 4 to 5 weeks for most people, right?
Correct, yeah.
So you think if people start that in 4 months, 3 months, in March, April, and we're potentially looking at cuts around that same period, and they have those issues, do we have to? I feel like we don't have to draw the map of showing exactly how that makes it more
it's funny you should mention that, because I remember, just to give you an example, I had a customer call me a little while ago, and they said, "Will, new customers, we're self-employed, the business is doing well, we're doing great income, blah blah blah." I started the process. I said, "Well, great. It doesn't seem, just everything over the phone. It doesn't seem that we're going to struggle. If you're looking to buy a property around the 600,000 mark, 700,000 mark, that's going to be smooth sailing." And everything's fine, blah blah. I said, "Okay, cool. If you think that's you're in a good financial position, you've got the tax returns done for the last year, everything's paid for, the taxes, everything's up to date, shouldn't have any issues." Yeah, no problems. So let's make a conditional offer. They went and made an unconditional offer, right? Obviously, I don't tell customers to do that unless they understand their finances, right? Without having the pre-approval. So they did it, and then we start the application, and there's heaps of issues, three defaults, missed repayments. And we got it done. We got it because we've got a massive suite of lenders. That cater for any type of deal you can think of, right?
Yeah.
So we ended up going for obviously it's a solution based purchase.
It was not the sharpest rate, was it?
Nah, not at all, not at all. And then people ended up complaining about the rate. I said, well, but think about this. When we first had the conversation, it was a very very
vanilla.
straightforward
Yeah.
vanilla deal.
Yeah.
But we found probably four different issues.
Yeah.
Like, and this is what you mean by preparation.
Yeah.
Like, we do come across issues every now and again. Some of the things you might not even know, but we got to tackle them as they come.
How many times have you seen, and let's just say it's like a regular PAYG person, they're like, 32, let's even say they're single to take the complication of a partner out, and they've got an afterpay account they didn't know, a credit card they didn't realize got taken out when they did something.
A store card when they bought a computer when they were like 20.
How many times does that come up? And it's like, it's obviously not a big deal, but it probably
Latitude card is probably one of the biggest things.
I've seen them all the time. I think I had one from back in the day as well.
Yeah, because I think they offer a lot of that stuff when you go to Maya or David.
You know what? I got one. I went to IKEA. And that was like it was like a 12-month interest-free thing. I was decking out my very first apartment, and I think I dropped like $4,000 or whatever, which goes a long way in IKEA, let me tell you. But when you're starting from scratch, you need to spend all of it. 12 months interest-free, and I didn't realize that the account wasn't closed. Like I obviously paid it out, but like I didn't realize the account wasn't closed.
Yeah, but a lot of people buy computers for that sort of stuff, and they take advantage of the overseas no insurance deal, right? Because they get a card, it's like a free card with Latitude. Well, this is no means any propaganda for Latitude, but it's just because you pay no insurance, you get the card and you can have overseas cover for free.
Oh yeah,
So a lot of people take up the card for that sort of stuff, but then they forget because they don't use it.
Yeah.
It's put in a drawer and it's not used, but then people forget it's a credit facility. It needs to be declared. Next thing you see, your application is bouncing back for under declare.
Yeah. Well, you remember we had a mutual client a few years back, and they didn't want to close the credit card because they were overseas. They're going overseas for insurance.
Similar thing.
Yeah. No, you do say that's
he was a smart guy. He ended up.
Yeah. Oh, we got it all sorted. Like understood. It was obviously just in the gold standard scenario that we always, he didn't want that, but
it's fun. It's preparation.
Yeah.
Like you need to get that pre-approval ready, because when you got to go to the buyer's agent, with the pre-approval, because that way when the opportunity presents itself, you strike. Because there's a lot of competition, right? And it's your name in line.
Absolutely,
right?
of course.
Your name. Whenever you make an offer, you want to make sure it's smooth sailing again.
Yeah.
Right?
Yeah. Well, I think that's the importance of finance. I think if we flip it back over to my realm more, I think the next one that I want to talk about in terms of preparation for biggest factors for success in 25 is then the portfolio planning side. So we've talked extensively over the episodes around planning out your portfolio, but I think so important going into 25 that if you don't have a portfolio at all / a portfolio plan, you need to get it done. And we're doing it right now with
the first meeting with you.
Oh yeah, like once they're signed on as a client, we obviously do it. But we're doing it with
strategy session.
No, after that one, after that, yeah. Like because that's when they're signed on. We can obviously, we go very in depth with them. So that's obviously when they've had to pay us a little bit of money to offset our costs there. Yeah. But like we're doing it right now, and we're recording this a couple of days, obviously, before it's going to come out. But something we've been saying to everybody in this run into Christmas is jump on board. And our commitment to you is we're going to get your portfolio planning done before Christmas, when obviously we have a shutdown, same as everyone else. So that way, as soon as we start back up in January, that's already done, because that's a very complicated side. So if you don't have a portfolio, you don't have your plan, get that sorted out now. Or if you do have a portfolio and or a plan, review it. Where are you at in your journey, right? Because the plans always change. Where you want to be also changes. So getting on top of that, so that then you do know, and the purpose behind it is so that what is the next deal I'm trying to get? Because if you don't know what deal you're trying to get, you can get everything else sorted, but otherwise you're going to end up buying the wrong thing.
Yeah.
So I think the portfolio planning side is so crucial, and especially if you're working with a professional, it takes a lot of time. Don't get me wrong, but it's not time that you're personally committing. It's the professional that you're paying for them to do it for you. They're committing that time. And not only will they do it better and faster than you, but you just have to then sit the meeting that they set with you, it's a no-brainer. Just get it done. Anyway.
Couldn't agree more.
All right. So third thing on preparation, right? Your structures. This kills me, man. This is what I'm seeing so much right now. And we were talking before he jumped in the session about a deal between us that ended up sort of being impacted by this.
Mm-hmm.
Getting your purchasing structures sorted out, right? So what we mean by that is if you're buying in anything but your personal name, and that's typically like it could be a self-managed super fund, it could be like a trust, it could be a company, it could be a variation of them as well, or any other entities. I can't think of any that come.
Yeah, but you got to know that before you start the
Of
process,
course,
right?
and that's where
Speak to your accountant. I think that's
Exactly
that's
right.
the number one thing. Have a chat, understand the best structure for your personal circumstances.
Yep.
Then you speak to a broker.
Yep.
Because then the broker can set it up, from the outset the right way. 'Cause
100%.
once you get the application done and it's pre-approved, let's call it in your personal name, and then after the fact you want to change it, then it can cause problems for everyone in the process, including the buyer's agent.
Oh,
Right?
of course. But I think if we even make it more simple than that, is that those structures can take weeks to set up, right? Weeks and weeks and weeks. So let's even just assume that they don't backflip and that they kind of know. You can't go and set that up realistically when you've decided on the property you're going to buy. It's just not going to work. So if you're going to do all those things, get ahead of the game, right? Like if you're going to set up a self-managed super fund, it could take a couple of weeks to set up a self-managed fund, and then it could take a month or more to roll funds over.
It's much like trusts.
And then
Trust companies.
exactly right. It can still take a few weeks to get them sorted out. Then you got to go through the pre-approval process. You got to do all that. So, I think if there's something that we could actively say, it's if you're going to be going through those structures, and that's a lot of people that both of us work with do it, right? And it can be very powerful,
And you got to remember, it's complex lending.
Exactly right. I think
it takes longer.
It's very name complex
for everyone. Not just the broker to analyze it or go through. It's more documentation required. The bank, it's much because you think about it, the broker will prepare the application. They are presenting a deal to someone who's going to assess it, who knows nothing about the companies, the structures. So they're going to read. So the better the application looks and reads, the easier it's going to be approved.
Yep.
And so usually we come across lots of issues along the way because there's more documents. By the time they get one document, the other one's expired.
Oh, and isn't that the fun? Isn't that the? It's not really fun.
And then people complain about it, right?
Yeah.
It's a lot of documents. Yeah, it is. Well, you're borrowing money. Think about that. Would you lend money to anyone who knocked on your door? No, you wouldn't.
And it's not just a Latitude store card. It's hundreds, if not millions of dollars, hundreds of thousands, if not millions of dollars.
Yeah, correct.
But no, so cool. I think that's a big one on the preparation, right? Is the purchasing structures, right? Just get them done, right? And if you even have an inkling that you might want to do something in those structures, talk with your accountant, talk with your broker, talk with your team, talk with everybody that you need to that's a professional involved in the transaction, and work it out.
I can't stress enough. if you're gonna go with complex lending, buying a trust, self-managed super fund, before you come to a broker, have a chat to your accountant.
Yeah.
Understand the best way to go. Tell the broker how your accountant has suggested to structure it, and then you start the application. Not halfway through, you change the goalpost.
You're very passionate about this.
No, it's because it affects everyone involved.
Yeah.
Right?
Yeah.
It can delay the process. It can delay the offer.
Yeah.
It can the finance clause. It's a ripple effect, right?
Yeah. I love it. I love the passion. I love the passion.
That's
burned one too many times, haven't you, by complex lending? But cool. I think that really segues into the next part, which is now that's all the preparation stuff, right? Now let's get into some of the other things that you need to do. And the first one is building that team, right? We've done a whole episode on building your all-star team, but in terms of getting ready for 2025, you've got to build that team. And if you're not sure about who you need, go and listen to our episode. It was one of our earlier episodes about how to build your all-star team. But you need to do that, right? And you need to have that ready to go, because unless you feel confident that you can do it yourself, right? At which point, you are the team, then you need to have your team around you and they all need to be on the same page. And if you think about, let's play this out logically, right? Let's say you need to get, at the very least, a broker and a buyer's agent, right? You could be throwing on top an accountant. You could be throwing on top, an insurance broker. You could be throwing on top a financial advisor, right? But we'll exclude all of them for now and just say we're going really simple, and it's a broker and a buyer's agent. You're probably going to have to sit, 4 or 5 meetings with with 4 or 5 brokers and then 4 or 5 BAs to kind of work out where you feel is the best fit. But that comes to my second point on this, which is you also need to be decisive, and you need to be decisive early. So if you want to go and sit the 4 or 5 meetings, that's absolutely fine, right? And I know that myself and my team, and I think I could probably speak for you on this as well, fully encourages you to speak to as many people as you feel is necessary
until you're ready.
Until you're ready, right? Because when you then come back and work and inevitably work with us because you know we're going to absolutely kill it for you, we've then built that trust and you're not sitting there second guessing and going, oh, you know, I only spoke with 3 and I really wanted to speak to a 4th, but I just couldn't do it, right?
Mm-hmm.
But equally so, if you're then, you know, like you're going to have to trust your gut at a certain point, right? Because you probably haven't worked with any of these people before. Maybe you've heard them on a podcast like us, or you've had a referral from a friend or a trusted person. And you need to be decisive, right? So if you know who your person's going to be, right? Let's take us, right? You've been listening to us. You know how we think. You know how we talk. You've heard the way that we articulate ourselves. You know the way we think about property. And you go, you know what? Will and Lachlan are the 2 guys that I want to do this. Then don't waste other people's time. Just come talk to us, right?
I like that approach.
Save their energy, right? Like they might be competitors of ours, but we also have empathy for them in that we all sit meetings that don't end up eventuating. If you know, be decisive and do it because you're going to save your own time. You're also going to get to your result faster, right? But equally so, if you listen to us and you like the way we chat, but you think, oh, you know what? Like I love listening to their podcast, but we're probably not aligned professionally to work together. Don't book a meeting with us, right? Don't book a meeting with us. That means you wouldn't book a meeting with somebody else that you just don't feel aligned with, but maybe you do it because you just feel like, oh, I probably should, right? Be decisive. Do it early and be decisive and then trust your gut.
Beautiful.
You know, beautiful.
Beautiful. I love it.
I'll get off my soapbox now. I'll sit back in the seat. But I reckon the next one is you then got to move quickly on deals, right? In 2025.
Yeah, I think that's probably the biggest one here.
So, I mean, realistically, you should be moving quickly on deals anytime, especially over the last, say, 4 or 5 years, but definitely moving into 2025. You got to move quickly on deals, right? Like if you've got a good deal, I can pretty much guarantee you if somebody else knows about it and they're half good at their job, or if they're doing it by themselves, they're half decent at analyzing deals, they're also going to know it's a solid looking deal. So, you know, you're not going to have a week to look at a property, right? You might only have overnight. You might only have a day or 2, right? You might, when you go and take the deal to your broker, you might only have 14 days to get your finance done. You might not be able to muck around and try 4 different lenders to do it. So you've got to move quickly on deals or you'll miss out. And it's just going to get harder and harder and harder.
Yeah.
Anything you want to throw?
No.
I can see you just nodding.
No, it is because sometimes we do come across clients. They take too long to accept a property as well, agree on a property.
Yeah.
Like, why?
Yeah.
Give me reasons.
Yeah.
Right, and that's part of the moving quickly point that you've raised. Because if you're not doing it, someone else will.
Yeah. Absolutely. Well, I got one more point. There's a few sub points within it, but I got one more point, all right, that I think is how we win 2025, all right? And that is taking solution-based approaches. And I think there's a few levels, right? So I'll talk on the property front, and then you can maybe talk on the finance front.
Bring it on, baby.
So taking a solution-based approach with property is understanding where you're at, right? Like, for example, I can tell you right now, we've got a deal that we're doing with a client, right? He's a great guy. We really like him. We really like working with him. But he's got a very strict budget, and then he keeps adding on requirement after requirement in the deal, right? Now, naturally, we're not showing him bad deals.
Mm-hmm.
Of course not, right? Mm-hmm. It's our name and our reputation, and we want to perform for every client. So we're not showing him bad deals. But he's adding on requirements on top of each thing. And first, like, the requirements are a lot of the time quite silly, right? They're things that are emotional factors. They're not actually, influencing the quality of the investment, right? But where we can, naturally, we want to try and make a scuff
mark on the wall.
Yeah, we want to make a client feel comfortable where we can on things that like we got to pick the hills we die on, basically, right? Yeah. But where it really matters, of course, we'll tell a client and help educate them on why it's not important. But for a lot of these things, it's just not a hill that's been worth dying on, right? But rather than being solution-based, because he also has a time limitation on him, which is the reason isn't important, but he's got a time limitation on him, right? he's not understanding at times the fact that this might not be the perfect property in your eyes, but it's still very, very good. It's a good deal. We're showing you why the numbers work, this and that and that. And rather than taking a solution-based approach to go, well, I've got all these niche requirements. I've got a time limitation against me. I've got numbers limitations against me as well. This is actually a solid deal. I should just take advantage of it. He's not taking that solutions-based approach. And he's missing out on good deals. And he's really running the risk that he's not going to be able to buy a property, full stop, right? So then suddenly he's then possibly put back 2 or 3 years rather than taking something that's a little bit, not different, but, not 100% of exactly what he thought he wanted, but is being backed up by good, strong evidence on why it's a really good deal. And then he might miss out, you know? So on a property side, solution-based approaches is, jump in and rip into the deal. If it's a good, solid deal, you're never going to find the perfect one. So if it's a good, solid deal, jump in and be there, because if you miss out and it takes you another 2 or 3 months or longer, especially in a market that's fast moving, it's a lot of gains and value that's missed out on. So
couldn't agree.
That's the property side. What do you want to say about solution-based approaches for finance in 2025?
Oh, I agree with you. You got to be ready to strike. I think there's an element of opportunity cost there. You got to strike whilst it's hot. If the opportunity presents, you got to be ready. You got to move. You might not. Maybe if you've got an issue with your credit file, let's call it. That's a simple example there, and you want to wait until you're ready. Until everything's clear. Because you can think of many examples. Like for example, you want to wait 6 months until there's good and clean history before you can buy. But then you can go and use a solution-based lender with a slightly higher rate, which is going to allow you to buy a property today instead of 6 months, 12 months time.
Yeah.
What would you prefer? Are you going to be carried away by the rate, or missing out on a very good deal, which might bring you, 50,000 in equity or growth?
Well, that's it, right? Like maybe you're 0.1, 0.2, 0.3% of a higher rate, and maybe if over 12 months that costs you an extra 3,000 or 4,000, but instead you just decide, the rate's too high, I don't want to do it, and then you just don't buy anything, and you've missed out on $100,000 of gain. Well, you've given up, $97,000 to save $3,000. Like it's crazy. Like imagine that. Imagine if I said, we'll do that trade.
It's a tricky situation when you want to explain that to the customers, right?
Of course, yeah.
Like, cause you got to be
delicate.
Very delicate.
Sometimes our bedside manner
it jumps out, right?
Yeah,
it jumps out. It's like you said, you're gonna save 100,000.
Yeah.
But you're gonna spend 3,000. So where's the gain?
I think you know what? I think I'll make a big shout out on both of our behalfs. If you're a client listening or a potential client listening, and our bedside manner has ever not been as nice as you would have liked it, I promise you it has only been from a place of care where we can see care and love, and we can see the bigger picture, and we know that we're trying to help you make a really strong deal, and we just want to help you, right? And sometimes
there's
bedside
a lot of
manner.
passion.
Exactly
there's
right.
A lot of passion. Yeah, correct.
I mean, think like we've got literally thousands of people listening to our podcast every single time it comes out, and I think we're actually recording episode 20 right now.
Yeah.
So
big shout out,
episode 20. So I think people know our passion, and I think that's the most important thing for people to remember is we're not out there self-serving. We're actually trying to help you. And so often when we're getting passionate or really trying to explain something, it is literally from a place of love and care, because we can see possibly you making a decision that we know is not the smartest one, and we're just trying to help you see the light, because we want to see you be successful.
Thank you. That was very kind of you.
It's kind, yeah. I feel like people forget, their success is our success.
Yeah,
like we might not own the property, but their success is our success. And we love that, and we have such good relationships.
A happy customer is exactly what we want.
Absolutely, mate. Well, I think that is everything that people need to do or know for success in 2025. So I guess the next episode that comes out is literally going to be, I think, January 1. So this is officially our last podcast episode for 2024.
Oh, geez.
How do you feel?
Yeah, a bit sad.
20 done. I mean, there's 26 fortnights in a year. We've done 20 episodes. So we had a fair crack. We obviously didn't start at the beginning of the year. We've had a pretty fair crack this year.
Yeah.
You excited for next year to come back?
Oh, very excited.
Yeah?
Very excited, especially after today's episodes.
after today's episodes. Well, thanks everybody for listening in. Thank you for tuning in. Over 2024, we are so excited to come back in 2025 and keep breaking down topics and educating and talking property with you. So, as I guess a bit of a big final shout out, right? If you're loving the podcast, please give us those 5 stars on whatever streaming platform you're on. If you'd like to contact us to give us feedback on the podcast, or tell us some episodes you'd love for us to do, you can find our contact details in the episode link, as well as the overall podcast show link, so you can find us there. And then, if you're sitting there listening to this episode over the Christmas New Year break, or you're having a listen to a few other ones, if you are really looking forward to taking 2025, a bull by the horns, start or grow that property portfolio, right? Go and have a chat with Will and his team at Aussie Finance, over at Aussie Newtown. They are going to help you out, right? They are going to set you up and help you with all the things that we've spoken about in this episode to prepare you for 2025. So go and have a chat with them. And then on the actual property side, me and the team at Atlas Property Group, we would absolutely love to have a chat with you. Go and leave us a website inquiry. We will start 2025 off for a bang with you. You can get access to all of our award leading tech, and we're going to help you out there as well. So from myself, and I'm sure Will say something in a second, thank you so much for 2024, and we can't wait to be back with you in 2025.
Thank you very much, everyone, for listening in. We're very, very proud of 2024. Great year. Let's make it an even better one next year.
Brilliant, mate. I love it. All right. Enjoy the holiday period. Thanks, everybody.
This is a Piccolo podcast production.